Welcome back to the Keys to Success podcast. You have your host, Tilisa Stubbs. We're so happy to have you guys back this week. We got some exciting things to share with you guys. But first, let me introduce my beautiful co-host, Deba Douglas. How are we doing, girl?
I am doing wonderful. How's the weather for you in Virginia?
You know what? I actually just took the dog on a walk and it's like 78 degrees, like blue skies, no clouds, all greenery, like all you see like all the green leaves like turning into like the yellow and red. I just love the season. So it's beautiful.
That's nice. It's muggy here in Texas. It's like a real muggy, rainy day, but I am not complaining because we definitely need the rain. And the Texas Rangers won last night, so we are good.
Hey!
And my flip needs some rain because I put some new sod down and I do not want to have to go over there and have to water that down. So I'm good.
What? The Lord shall provide.
There we go.
Right.
Awesome. Well, we've got some amazing guests with us today. Lance and Nate, welcome to the Keys to Success podcast. You guys, thank you so much for joining us. I don't want to like butcher you guys' intro. So I want you guys to share with the audience who you are, what you do, and then we're just going to casually just have some conversation. How's that?
That sounds great.
Sounds great.
Awesome.
Yeah, guys. And I was wondering if you were going to give the name Vedomi Capital a shot. I was like, she didn't practice it right before she went into her intro. But thank you guys so much, Tilisa, Deba. Deba and I go way back from my single family days and have stayed in touch through some mutual friends. And we're just always celebrating one another on Facebook and celebrating each other's wins. So yeah, we are Vedomi Capital. I'm Lance Doty. My two partners are Nate Vins. Adam Mitchell is having technology problems. He will be here soon, or I should say Adam J. Mitchell. That is the name printed on his new book. He'll have to talk about that later. Since he's not here, we'll have to surprise him with some little nuggets like that. But we are a multifamily syndicator. We own and operate 346 units together. So 80% of those in the Dallas market right here off of Aldelia. And then the other 88 units in Oklahoma City. There's about another 115 units that Nate is invested in. And there's about another 40 that Adam has some financial interest in as well. But in terms of what Vedomi Capital is and what syndication means, is that we truly believe in the mindset that you can do more together. And so the power of syndication allows us to pool investor funds and purchase properties that individually we wouldn't be able to afford, but together by the pooling of funds, we can do so. And so we allow your everyday investor to passively invest into multifamily. They still get, there's Adam. There he is.
Hey, Adam.
Sorry about that.
No, you are good. We are live and we cannot wait to hear and chat with you.
You're in the middle of the Vedomi commercial. But there's Adam as promised. And what the power of syndication does is allows the everyday investor to invest passively into tangible commercial real estate like apartment complexes. And so we believe multifamily is the greatest investment there is because of three reasons: high double-digit returns, quarterly dividends, and the third is the tax benefits. You get active tax benefits through a passive investment called bonus depreciation. So that's what we do. We buy property, apartment complexes in Dallas-Fort Worth and Oklahoma City, and we allow investors to come along with us for that ride.
I love that. I love that. And one thing I do love, one, we're so honored to have you guys. But two, I love that each of you have a different skill set that is all led together to now have Vedomi. And I would love if each of you guys can just kind of share just a little bit about how your personal journey has led you to be where you guys are now doing the venture capital.
Yep. I'll jump in there. Thanks, Deba and Tilisa again for having us. We're super excited to be here. I think we have a pretty interesting story we're chatting about before we went live, and that how we met and how we joined up. And I'd like to dig into that just for a moment, if that's okay with you guys. And that, I had participated with Adam and Lance prior to our are coming together and joining and forming of Vedomi, where we each had our separate entities. And I actually put them as a reference on one of the deals that I was going after. And they're like, hey, brokers typically ask, hey, list a few references for me. I want to check up on you and look into you a little bit. Little did I know they were bidding on the same property as well, but we weren't talking like that because we weren't partners. We weren't thinking about taking deals down together, even though we had done deals in the past. And broker called and said, hey, Nate put down you guys down as references for this. And so I don't know what that looked like. Obviously wasn't on that call, but after that we started kind of putting our heads together. We had a laugh about it after everything kind of came to fruition with that. But ultimately, like Lance mentioned earlier, I mean, we can do a lot more together through syndication, not just syndication, but our two companies now combined into one. We're now doing more because of their addition to my company and my addition to their company and now joining. So that's a little bit about our background and how we came together. The number of skills that each one of us bring into the deal is super fascinating because it takes a team to do this. No, not one person ever knocks this down together or knocks this down, on their own. And so if somebody's telling you that, they're not thinking correctly, I don't believe, to put it nicely, but it takes a full team to acquire and operate and eventually exit an apartment, 100, 150, 200 unit type places. And so it takes a fantastic team that you need to be really in tune with. And you guys need to, guys, gals, anybody, if you're partnered up with somebody, you need to know where their head's at, how they operate, and what their long-term goals are. And if those align, then I consider doing, a lot more business together, because that's a unique thing to find. And I think we're all super lucky to have found that in each other and be able to put our dreams together and move forward in that manner.
Yeah,
I'm sorry, I jumped down a rabbit hole.
No, that's right. No,
keep going. I texted him behind your back. I was like, let's just see how long it goes. I think you answered the next 3 questions. No, I'm kidding.
I'm buzzing. I'm buzzing. I got coffee going on.
But what's really cool, Deba, and I know you do so much for your following, and you've got mentees that look up to you, and you also speak out a lot about your story of coming from a W-2 education background and into real estate. And I would love to kind of throw it to Adam. Adam and I met as W-2 tool salesmen. We were in industrial sales. We met in 2012. We became best friends through eating on his expense account. And we leveraged those lunches into a side hustle that would turn into a single family business, and a single family business that turned into a multifamily business.
Wow.
And that's been our journey. And Nate is still grinding his very successful W-2 on a daily basis. This is all stuff that he's able to accomplish after hours and extracurricular, because that's what real estate allows us to do. But Adam, why don't you kind of fill in Deba's question a little bit more directly with what got us here? Where did we come from?
Yeah. So, Lance kind of prefaced it. We, when we met, we were both working W-2 jobs, but in the back of my head, it was always not ideally what I wanted to do. I always had the entrepreneur bug in me. I just couldn't figure out how to get it out and get it in front of me. And so I always had that. I've had that since I was a kid. Finally, in the W-2 world, I finally had sort of, put my head down and just grinded, had the best year I ever had, salesman of the year for the company I was with. I actually lost a promotion to become the regional manager for that company. And that's when I basically went to my wife and I said, okay, this isn't working out. I'm done traveling. We're about to have a kid, our first kid. How do we make real estate full-time? That's what we want to do. We know that's where we want to go. How do we make it work? And the solution was, let's flip a house. I had experience renovating houses before, but I kept all of them as rental property. So I had not renovated a house to sell it yet. So that's what we decided to do in 2016. And I called Lance and said, hey, Lance, this is what we're doing. We're going to flip a house. Are you in? And I'll let him tell you what his response is, because it's pretty memorable.
Well, my response was, yeah, whatever. I mean, I was like, I don't have any. He goes, I don't have any money though. And he goes, I'm your best friend. You don't think I know you don't have any money? I was like, okay, I'll be there Monday. Was that what, you know? And long story short, we ended up sourcing a deal from New Western. That guy made a $10,000 wholesale fee, which is a bargain, and made way more money than we did on that flip. And I watched Adam and his wife almost lose their behind about 4 different times, and he just kept it cool as a cucumber the whole time. And at the end of the day, we licked our wounds. We took a 60-day project and turned it into 180 days and a $90,000 projected profit. And I think we turned it into $9,000. And that's when Adam was like, we got to learn how to wholesale. That guy made way more money than we did. And he was done with it after a week. And
and this is 2016, and I had never heard the term wholesaling related to real estate ever. Never one time have I heard it. I've been to industry, groups, either just never registered, or I never actually heard anybody say that word. But we started thinking about it and understanding where the guy that we bought that deal from got it. And we go, okay, let's figure out what wholesaling is. We reverse engineered it. And 2 years later, we were wholesaling properties. And, that kind of grew into 60, 70, 80, transactions a year. And we would sort of pick off the best one each month and flip that ourselves, and we would wholesale the rest. Picked up a couple rentals along the way, but for us, 5 years into that basically retired Lance's wife out of her job, my wife out of her job, me out of my job about another year later. And really that was ground zero for us. We knew just getting out of the W-2 world would then allow us to really implement our plan, which is real estate, which is multifamily. This is all in my head. This is what my head is telling me day in and day and night.
You're the visionary. I love it.
Yeah. And so, we started down that path with multifamily, and during COVID started having some presentations. I go to Lance and I said, okay, now is a good time for multifamily to start. We have some downtime. A lot of people are going to be at home. Let's put a sample deal together and let's present to them and see what happens. Lance is still working his W-2 at this point, and we started having some, basically sample deal webinars like this, where we would present a deal, and that turned into, a couple times a week, and we got pretty good at it, and we're underwriting deals, and lo and behold, here comes our first deal. We put it under contract and raised $6 million, and the rest is history. Lance quit his job, so now we're, he's also full-time in it. And we're still running both sides, single family and multifamily today. All of us are more focused on multifamily because we know that's where our future is. But the single family business still pays a lot of bills. And so we're really focused on scaling that as it continues to grow, so that we can spend the majority of our time multifamily, because, in single family, we're dealing with $15,000 problems, and on a good day or a good month, $100,000 problem. That's what we're dealing with. In multifamily, we're dealing with $1 million problem, $15 million problems, and that's where we are. We've kind of pivoted to, not that it's better or worse, but that's where we've pivoted to that allows all of us in this chat to go, okay, if we could solve these problems, we know what comes along with that. And that's why we're here. And that's why we're focused on that. So it's been a fun journey. It's any entrepreneur knows it's not all rainbows and sunshine and Instagram glory days. There's a lot of hard days, but
I love that. I love how just listening to you, it's like it was a progression, and it was like you kept thinking outside of where you were and where you want to go. And it was like, okay, we did the flip. That's what everybody tells you to do. Get into real estate and flip houses. Let's be this HGTV guru. And then you're realizing like, man, this sucks. Like, I don't want to be at the pins and needle over one buyer. And then we get under contract. It's a whole hot mess deal. Then you're starting to realize, okay, let me jump into wholesaling. Great. We're making money there. But I think we have a lot of viewers that are realtors, that are investors, and they may be wholesalers that are thinking like there has to be another way. There has to be more. So talk to us about, I guess, really the mindset and what needed to happen to transition from being like wholesaler, single family to now let's jump into this world of multifamily.
Yeah, well, I think everybody has that vision and that dream of, passive income, and I'm going to put it in motion, and I'm going to let it go. I mean, we've been doing this a long time, and we're still not there. I mean, you can't get more passive income than owning apartment complexes. However, you still own apartment complexes where people work, and you can't just take your foot off the gas and turn your eyes somewhere else, because it will fall apart, and it'll fall apart in a hurry. So, I think the bigger focus for me and the change in mindset is not on financial freedom necessarily, in the fact that, you have this mailbox money coming in that you don't have to think about. It's not that. It's doing what you really enjoy doing day in and day out, where you're willing to get up and go grind on it, and allowing yourself to be there in the bad days and the good days, and enjoying what you're doing. Like, we enjoy the process, we enjoy the journey. We would like to be able to scale it to where we can go take a month off, or not take a month off. I rephrase that: work somewhere else remotely, and not be in the office for any extended period of time. So I think for us, it's more about having the flexibility to, work where we want to work. But I don't think, I think the vision of just retiring and letting that money come into the mailbox is, I think it's not very realistic. No. It's just not very realistic. And if you do get that, I think that could be gone in a heartbeat if it's not something you really, really enjoy. We all have had a lot of tough days, even lately, with the rates changing and interest rates, and just, it's tough. But we're all getting up every day, and we enjoy it. We had a great lunch today as a group, and it's just fun. It's just a lot of fun. Yeah. And so I think the mindset there for us is shifted. I don't know about for anybody else, but I think it's shifted in what that, sort of freedom really is about. It's really about calling your own shots, making your own schedule, creating your own path forward, and enjoying that path along the way.
Yeah. Yeah. I would totally agree with that. I think once I originally left education, I was like, I just want more time to do whatever I want to do. And now that I've been 4 or 5 years in, I'm realizing I just want to be able to pick what I want to do at my day and enjoy where I'm at with who I'm with.
And here's a good example, and I'm gonna let everybody in on this. I normally would not even do this, but the three of us got a check 2 weeks ago for $90,000 that we split, the three of us on this call. So what was it, guys? $31,000 a piece.
Nice.
My wife and I didn't even have a conversation about it. It just flew right on by. Just not important.
Yeah.
You know what she wanted to know? She wanted to know if I was going to be at the kids' game that night.
Yeah. Yeah. And what a blessing that you were able to do that and still provide, because none of that really matters. It's about the kids.
Yeah. That's what's important. And when you really see that pivot, sometimes it takes a couple big checks to go, it's not really that important if we're grinding so hard that we can't go enjoy our kids, or take off and go do this or that. So that's what's really important. I don't even know why I'm getting emotional, but
I love it.
That's the important part.
I love that. Oh my gosh, I love that.
I do too. And I'm so glad that you highlighted that, because that's really, really big for me, Adam. I was actually listening to a sermon this past weekend, and it was saying that there are 4 things that's basically like the fuel to like everything that you're trying to succeed in. And if you can do any of these 4 things throughout the day, then you'll have that fuel. One of those things was laughing, just like that gut-wrenching laughter, right? Dancing, hugging, just like those things that just automatically bring you joy. And it's like, if we can kind of shift our focus from the grind all the time and trying to make money all the time, and trying to do these things a priority, we'll probably find that we'll have more peace in doing those things. And so I'm so glad that you brought that up. One thing that you mentioned that I just want to highlight, because it is big. Everybody wants to get into the real estate space because they want passive income. And I feel like that's one of those overarching kind of dangling, tokens that everybody wants. And so for somebody who is looking to get into the multifamily space and they don't want to operate it, they don't want to have to deal with tenants, they don't want to have to make the difficult decisions, but they do want to collect their mailbox money because they have something else that they want to grind in, that they're passionate about, but they want this part to be passive. With interest rates climbing and everything, how can you guys ensure your lenders that they can still get these double-digit returns? I know that you guys said that you are raising majority of the money, and so are you guys not having to really deal with those interest rates because you're raising the money mainly?
No, I mean, in fact, it's something that we have to take very seriously, and it's something that we have to protect against even well before the market saw these interest rates. We had ourselves protected against them and had what we call sensitivity analysis or Armageddon analysis done ahead of time. So if I'm going to hold your money, Tilisa, for 3 to 5 years, I've got to show you really a worst case scenario return. Some of these assets that we buy, and our specialty is value add. Our specialty is an apartment complex that hasn't been loved on in 10, 15 years, hasn't been managed well. Hopefully it's got a lot of occupancy, but not necessarily not necessary if the basis is good, but our own construction company, it's another asset, aside from part of Vedomi's, we have our own construction company, Vedomi Construction. And that's where we create the value, right? Is you buy at a price, you improve it, you raise the net operating income. And then once we've executed the business plan, we sell and everyone gets a share in the returns. But we have to underwrite that. We have to underwrite what we see the market doing in 2023, in 2021. And even though no one had a crystal ball, we had to protect ourselves against that. And luckily, there's products like rate caps that are very expensive that we put in place that a lot of other owner operators didn't, because they were able to save $600,000. What did we pay for actually not even 600? In 2021, they're only 2022, they're only $185,000. Now that same product's like $800,000. But wow. But we have to protect against that, and we have to. When I'm talking to someone who's not just investing in Lance and Nate, that I got a lot of guys that are like, "You guys are killing it. Here's my 50. Just give me $100K back in 3 to 5 years." We're like, great, and here's the monthly update. Here's your quarterly dividend. Awesome, But we have a lot of sophisticated folks who really they don't want to know what the returns are. They want to know how much of a sensitivity analysis did we run, barring these crazy scenarios.
Right.
That we have to hit it head on is the answer to that question, Tilisa. And that's one of the things that's really great about Vedomi Capital is we aren't just you can latch on to a deal. You can follow an owner operator like Vedomi Capital, and every one of our deals you can raise a couple $100,000 and be a very minor partner in the scenario, right? Get compensated for bringing some capital, things like that. But we are the lead sponsors and the lead operators, and one day we'll own our own property management company because we want to have the leverage on all of the decisions, right? So but we have to hit it head on is the answer to your question, Tilisa. And we underwrite it the way we underwrite it. It still has to show double-digit returns for us to put it in front of our investors. Yeah.
I don't know if the audience knows what an interest rate cap is, but it's been a hot topic the last 12 months. Before the last 12 months, people didn't even blink at a rate cap. You just if the lender required it, you pay $10,000 and you're done with it. You don't ever have to think about it. But in the last 12 months, it's become probably the biggest conversation piece in multifamily, and it's exactly that. It's an insurance policy on rates going up, and pretty much on any floating rate loan nowadays, you're going to have to the lender will require it, and so basically it protects the rates going up. So luckily, our 2 of our 3 deals we had to buy it on. We didn't have a choice, thankfully, and we did, and that has extremely protected us from the rates going up. We bought one, in March of 22. I think our interest rate on that loan was like 3.865, and now it's 7.8. Well, the interest rate cap being in place, basically it basically takes that increase in interest, and the insurance policy pays out for it. So in essence, we're not on the hook for that additional interest, which is huge. I mean, it's huge. So there's a lot of folks that bought deals in 2018, 19, even 20 that didn't have a rate cap, and they are there's a lot of them in trouble right now.
Yeah.
And
so would you, if there's somebody watching who wants to invest in a syndication, if they don't decide to lend with you guys, what are some things that they need to be looking at when they're looking at an operator? Obviously, I would say one thing is they need to ask if they've already paid for a rate cap. And what are some other things that they should ask an operator before lending?
Nate, go ahead.
Yeah, I think great question. I think they need to be very familiar with the operator themselves. I mean, ultimately, it comes down to, are you trusting these people with your capital? You busted your butt to earn the capital, and now you have to put it somewhere that you trust. And for most people, that's a 401k or something like that. But I can tell you from personal experience that my 401k is not delivering the type of returns that Lance and Adam are delivering, along with myself, right? So, and a lot of other syndicators. It's not just us. We're working hard to be special, but I don't think we're special in the fact that we can operate a building. But ultimately, you need to be comfortable with them. Do they have a track record? How are they operating? How is the debt structured? What does their underwriting look like? And if you don't know the answer to these things, then call somebody that does. And there's a lot of people that are more than willing to pick up your phone call as an investor, because you give them help about whether it's Vedomi deal or another deal. You're going to keep coming back to you or back to the person that's helping them, and they can talk about, hey, well, let's look into their background, or let's look into the debt that they're talking about, or let's go look at the asset. I mean, if you're nearby, within a few hours drive, or even research the market online. I mean, a simple Google search can lead you to results about which markets are working in favor for that type of investment or not. We're lucky to be living and working and acquiring assets in North Texas that's been blowing up for quite some time here. I know I can't drive down a street too often and not see several new buildings popping up, which, just on the surface level, that means people are flocking here. It means the economy is doing well. Businesses are coming here, and a lot of other reasons. And this isn't the only place that it's happening, but we're getting to witness it and be a part of it. Tilisa, I don't know where you are in Virginia, but I'm sure there's some good stuff going on there as well. I know people are investing all the time. So be familiar with the market, I guess is what I'm trying to say, and familiar with what the investment looks like. But most of all, it's the operator that you need to be comfortable with. So, Lance, Adam, myself, we're all very easy to get a hold of. And that's one thing that, we pride ourselves on is, hey, if you have a question about something or something's not adding up to you or whatever the case may be, give us a call. You got our cell phones. We're normal, hardworking folks. So, let's chat about it and let's have a relationship, because ultimately it's not one deal that we want to do with you. We want you to be a part of all of it. And that's how we all grow together.
Yeah, and I would just highlight one thing Nate's saying is, you need to understand the investment. If you don't understand what they're putting out there, then it's probably not for you. And that just could mean it's too complicated, or, there's some things you don't understand, and that's okay. But there are other ones that you might want to look at, and that's why we try to keep our approach and our investment very, very simple. We buy Class B apartments in Dallas, Fort Worth, and Oklahoma City, and we're looking for properties that need work. That's it. That's all we do.
And as an investor, be honest about what you don't understand, because we can, as simple as we're able to put it, hey, we collect capital and we buy a building.
Yeah.
We can make that sound really, really challenging and difficult just with our verbiage, just with the diction that we use. So if you don't understand something, there's 100 different ways to describe it. And if somebody's just throwing a whole bunch of jargon out there, say, hey, why don't we retry this conversation, because it can be described very simply.
Right. And I know, Lance, you were saying earlier that, I mean, regular people like a plumber could, lend $50,000. So these people don't necessarily have to be accredited then, I'm assuming.
Absolutely. So, there's two different types of syndications. I won't overcomplicate it, but I say that, then I'm about to complicate it. No. There's two different types. A 506B is there's room for 35 non-accredited investors. In a 506C, which is a investment opportunity that can be marketed to the masses, you do have to be an accredited investor. So, typically, at Vedomi, we typically will have an opportunity for each of these investors, right?
Nice.
Well, if you're an accredited investor with a high net worth, very, very experienced in this game, and are just looking for some owner operators who aren't pencils down during this time, we've got a great investment for you. If you've just inherited some money, you've never made a big investment outside of your 401k, and you've worked 60 years at Texas Instruments, we've got a great investment for you, and we would love to get you in a deal and educate you about that. And so, yes, that's a great question. We try to make this is for everybody, and that's the neatest thing about it is, we were all talking about growing up in Garland, and me and Adam, we've got a rivalry because he grew up in Arlington, and he at one point he thought there was only one Wet and Wild. I had to let him know about the Garland Wet and Wild.
I think we were the original, to be honest, but I'm not going to say anything.
We got the fallout. But my whole life, I grew up driving down Aldelia Road to go from Garland to 635, where my dad was a construction manager. And in high school and college, I would work there for him. And now I own 257 units on that street, and that's what we help people do. Just like we came from the W-2 world and industrial sales, and are now in real estate. That's the beauty of these opportunities. It's for everyone, and there's education offered, and we take every investment very seriously. So right now, what we're really, the biggest opportunity is not even investing in opportunity in multifamily and sounding fancy. All we have to do is really beat the market, right?
Yeah.
Folks are so sick of having no leverage of where their 401k is invested. They wake up, it's plus 20, down 20. And for the last 3 years, I think the average is zero. No one's made a dime, And so, we've been able to get a lot of investors over to something that they can touch, see, and feel. They can see the bridge that's going over 635 to try to connect east and west, or south and north Lake Highlands. I get turned around over there, but you can see that investment from the city of Dallas, and so why would I not invest in this? I can touch and feel it. I drive by every day on my way to work. So that's what we give folks the chance to do.
Well, and we had a pretty good experience a couple of weeks ago. Lance said, "Hey, I need you to go to this lunch. This is a seller who we bought their house. We actually wholesaled his house. It was a house that he inherited from his family, and we contracted it, wholesaled it, and the transaction was very smooth, no issues. What did we make on it? I don't know what we made on it.
We made a good amount.
I don't know. Whatever we made on it, but that doesn't matter. We made some money on it." But they wanted to discuss, like next steps with what they made, because they made like 200,000. And so we have lunch with this guy, and he brought a friend along, and they're talking, and they want to know about multifamily. And we're just, we're basically having this same conversation that we're having now with these guys, and talking through the benefits and how it could be good. And, maybe it's something for you down the road. The guy ended up investing 100,000 of that money he made into, our deal. And he goes, "I need a place to put it. I need a good investment. I want to see how you guys do with it, and maybe we can do more." And, it's a cool way to basically give a guy that had no other opportunity to invest in a multifamily deal, because nobody would sit down with him and explain it.
Yeah.
So we just didn't invest before. So it's cool to be able to have that experience and opportunity to explain to him what we're doing and what our vision is, and him see that and go, "Okay, yeah, I'm going to invest with you guys. I like it. I don't want to put it into an IRA." And it was cool. So it's a really, really neat experience where we can, help investors come up with, different scenarios like that. And then a side note, his friend that was there that, really didn't look like he knew or was afraid of every type of investments out there.
Which he told us
after that one investment, he invested $100,000 of his mom's money inheritance that he goes, it's just sitting under my bed and I don't know what to do with it. And so it's cool to be trusted with that and understand, that's what we're dealing with. I mean, that's the level we're at, to where we've got to be able to take care of their money and help these people, and we've got to make them money, and so there's responsibility there, but it's also, this is what we signed up for, and we take full responsibility on managing that. And it has provided some really cool experiences like that. And now the guy's going like, well, maybe I can raise some more money. So now that initial seller is maybe a GP with us one day. So it's just cool to see the progression of what you can do for inside of investments like this.
And back to Lisa, back to your point, one question you can always ask of an operator is, what's your skin in the game? Our investors want to hear that we've got 10% minimum in the deal of our own money. And that's a lot of money, to go under contract on a single family home. You have about a 15-day option to kind of get things all squared away. When our lawyers and their lawyers agree on the purchase of a $19 million apartment complex, we've got 72 hours to put $500,000 non-refundable into escrow, typically.
Wow.
350 to 500. And so, when we're writing offers, we're serious, and we don't, if that check doesn't clear within 72 hours, we don't get our option period or our due diligence period just to see if we made a mistake or not, because it's still typically in this competitive market, a hard EM. So, that's another question to ask operators is, what skin in the game do you have? That's one of the ways we separate ourselves with our investors as well. So
that's really good, Lance. Oh my goodness. I wish I could sit here with you guys forever, because this is just like such a wealth of information. I'm going to let Deba close us out because I've got to pick up my kid. But one thing that I just wanted to mention before I left here is, goodness gracious, let me choose which one I actually want to go with before I end here. So one thing that I want the audience to know is that, yes, interest rates are going up. Yes, things are looking scary, but they don't have to look scary. This is a huge opportunity for us to become the bank. The banks are not going to be everybody's friends in the very near future. So you become the bank. The bank is just going to lend your money out anyways and earn interest. So why not you guys do that? You've got these three gentlemen right here who are more than capable of putting your money to work. So before you guys go, make sure that you guys tell the audience how to get in contact with you, how they can build a relationship with you, so that they can feel comfortable in investing, because everybody should have the opportunity to make their money grow and not have to have it under a mattress collecting dust and losing value. So you guys are great. Deba, I'm going to let you take it from here.
No problem. I'll talk to you soon.
Yeah.
Thanks, Tilisa.
Nice to meet you. And I'll mention one last thing real quick. Even though rates have gone up and the environment's changed, that creates opportunity. It creates opportunities for us to buy. Prices have gone down because of it, and there are opportunities out there. We are buyers. We are looking for our next deal, and there always are in real estate. There's always an opportunity to buy. It doesn't matter the market. There are always opportunities. So, the audience needs to know, and you need to partner with operators and investors that know that and can navigate that and figure out where the opportunities are. We've talked to several other operators at different events, and they go, we're just sitting on the sidelines for literally a year. That's what some of them have said to us. And maybe that's the right way, but we're still exploring opportunities and still seeing where we can employ our business strategy to generate the returns for investors that we know is out there. And that's our mindset, and that's what we're going to continue to do. And we're also going to stick to our guns. And if it doesn't fit into our box, if we can't find a property that doesn't fit, then we won't buy it. But we're looking. looking. So there's always opportunity out there.
You know, and Deba, I'm so inspired, and I want to set up a lunch with us because I want to talk a little bit more single family, because your journey has just been so great. I've seen you're like on your 5th burr when we met, and no telling how many you've done now. But now you've got the whole mentorship thing going. You got the brokerage going. You got deals closing every week, and it's not easy. It's not easy to move real estate right now, especially at the price ranges where your deals are moving. You're kicking butt.
Thank you.
But I know there's a lot of people following you that are like one step into this. I'm going to follow Deba blindly, and I don't know, but I still don't know if this is me, right? And we kind of all have that imposter syndrome, and I deal with this probably more than most, because I wouldn't be here if it wasn't for Adam mentoring me, you know, and you know. I walked alongside him in the single family business. He compensated me as well as you can compensate someone that's not a 50-50 partner. And then when a couple of rental opportunities came up, he made me an equal partner. And then through the apartment buying guys, I became an equal partner. And now I'm an equal partner in all of everything we've discussed today. But some of us entrepreneurs out there aren't the visionaries, right? Yeah. Some of us are the connector. And you know, I was able to find my visionary in Adam, and still have to get reminded monthly. You know, like, where are we going? Like, why am I doing this again? You know, we're so bogged down in what we're doing. But you know, if I can inspire anybody that's following you in the light that you put yourself out there, it's you don't have to be the visionary. You know, and that's what was so neat about bringing Nate into our fold, because Nate was a one-man band. He was having to be the visionary and the connector. And he's actually got great skill set in both. But he was, if you were being honest with yourself, you're probably bogged down by one or the other. You probably are more natural at one than the other. Am I right, Nate?
Well, yeah, that's what I said earlier. Anybody who's doing it on their own is not going to be doing it for long.
No.
That was me. So I was lucky to run into these guys and make it work. But thank you, Lance. Nice of you to say. But yeah, you need a team.
You do. And it's okay. Like, even if you just stay single family, but you're just not the guy that wants to do. I mean, there's a lot Adam does no one ever sees. There's a lot Lance does that Adam never sees, and we don't have to talk about it. He knows I'm connecting money to opportunities, and I know he's setting a vision and then delivering on the operation side of our entities, you know. And so, and each side of that is entrepreneurial, right? You don't have to be a one-man band. And so, you know, if that's something that you guys struggle with, and you would love somebody that comes from a different angle, and you're listening, reach out. We would love to help. Adam just wrote a great book called Life Pillars. We'll link that up as well. It's about finding that passion, and took him 4 years, and he finally went the who not how route, and spit out that book in like 4 months.
Wow.
And it's been great, you know. And so, you know, there's a lot of things when it comes to this entrepreneurial ride that, yes, apartments is what we do, but it's no different than the guy that opens up the ice cream store, or, you know, or any of it. It's just, we're all trying to do what we enjoy doing on our terms, and the freedom is in the time, and we can do what we want with who we want. And every one of us, the 3 of us partners, have a different journey, and it's different from yours, Deba. But we all have something to learn from each other, and would love to be an extension of that for your network in any way.
Absolutely. And I think what I love about having you guys on is that you can get a sense of each of you differently. Like, y'all are all different, but together y'all make such a powerful team because of your cohesiveness, and you're all striving for the same thing. And I think that's beautiful. I say that because it is very hard to do that. When I was a principal, it was hard to try to bring a whole staff together, and we're focused on one goal. And even now as a realtor, and, you know, doing different things that I do, that's so hard to do. But once you find that, that's a beautiful thing, because then you're not getting distracted, because you're all on the same goal, and you can do more together than you can individually. Right. But what I do love to hear about you guys, and I think y'all are a great inspiration for a lot of my viewers, myself, and as well, is that just keep going, and God will continue to connect you with the right people, because y'all didn't even know that y'all were ultimately going to all 3 work together and have one team, right? So I think that's the most beautiful thing. But ultimately, my main question is, what's next? Like, what do y'all have on deck for 2024? I know right now everyone's thinking about planning for 2024, but what do y'all are thinking and your goals that you're setting for yourself?
Yeah, let me start and y'all can finish that. But I do agree. And, you know, in terms of finding other folks to connect with and go forward with, some of that, and this is some of what we deal with in the book that we wrote, or that I wrote, Life Pillars, but it's about figuring out what you enjoy and what you're really good at and what you're passionate about, learning that first, so that then you can go connect the dots with someone that can fill in the gaps. You know, like for us, for Lance and I, when we were just working single family, I didn't want to be in the living room, you know, talking to sellers and figuring out how to buy their house every day. I could do it, and I could do it effectively. And I figured out that real quickly was not my passion. My passion was building a website so I could generate the leads and then let Lance go close the deal. And once we figured that out and we understood, you know, here are my strengths, here are your strengths, here is where they line up, and we really focused on getting better at those strengths, we just became a very powerful team. And that's what I think a lot of people miss, that step, is understanding, you know, where your strengths are and where you want to spend your time.
Yeah.
And then figure out then who fits in with you based on that. Because if you don't know that and you just partner with someone that's very similar, then you're not going to be as effective going forward. So you really got to understand yourself and then find that other person or people. And it's not easy, but it's something that, like you said, when you see it and when it works, it's magic. And we really had that also in Nate. And one day Lance and I are looking at each other and we're like, Nate is basically a partner. Let's get it going. We can do a lot more together. He provides A, B, C, and D, and let's get it going. So that's been a big, insightful and enlightening sort of, you know, process that we've gone through with, you know, really two times, me and Lance, and then me, Lance, and Nate. And so going forward, you know, we're heavily focused on operations. We're heavily focused on growing a team to manage our operations. We just set up the construction company, so we're looking at growing that. And at the same time, these guys are still looking at new deals, trying to figure out what our next acquisition is. Our goal is to own 1,000 units in multifamily. So we're at 370 something. So we're about a third of the way there.
Yeah.
So, you know, we're looking at that, but we also know that if we have 1,000 units under management, then we're going to have support staff to handle the daily and weekly meetings and reporting and accounting. I mean, we figured out having 3 of them that we're almost tapped out on time. Yeah. So we're having to get more efficient there so that we can do more and continue to grow and build, you know, upon that. So that's a big focus, I think, for all of us is growing the team, growing the processes, growing, you know, that side of the business where we can do more. We can make the transactions happen quicker. You know, we kind of find a deal and then it takes us a while to raise the money and we kind of bog down, and we want to be able to streamline and make that a lot quicker process so we can find the next one sooner. So I think a lot of it is getting more efficient in most of our processes in the next year so we can do more and help more people. And ultimately that just means giving more investors the opportunity to invest in these types of deals. That's really what it comes down to.
Yep. And you know, the last thing, you know, collaboration over competition. You know, our partnership exists because even though we competed against each other and Nate put that LOI in and he used us as a reference and we were the other bid. And
I was like, these are my buddies. They got me.
and I had a really good relationship in that broker office, and they're calling, all laughing at Nate, like he doesn't know that you're, you know, like, he's a good guy. And I still never told him until it all fizzled out. But here's what's super cool. Everyone says collaboration over competition, but we all get really greedy quick, right? Nate had the inside track on a 175 unit deal last Q4, and the first thing he did, I think, was call us and say, hey, just got info on XYZ property. Do you want to walk it with me? And I'm literally holding the phone to Adam, like, because me and Adam don't let people in. We're 10 years into this. We speak our own language. It's hard. It's hard for our wives to keep up, much less somebody else. And so I'm holding the phone like, Nate just told me about a deal. Like, he wants me to go with him, like, what an idiot almost like, can you believe that? Because everyone says it, everyone talks it, but no one walks it.
Yeah.
And we walked this property. We did everything the broker told us. And the broker didn't do a good job of brokering the deal. He didn't broker us to the closing table, even though we did everything he said to do, which is the sign of a good broker. But how that paid off for Nate, a week and a half later, we get a property two blocks down, across from another one we already own together. And instead of Nate coming in as a co-GP, because Nate called us on that other one, I was like, you know what? Let's get Nate involved early and let's reciprocate that, because that meant a lot to us.
Wow. Yeah.
Two off-market deals. And when it's off market, it's like, you're signing NDAs and everything. But
right.
That phone call changed Nate's life and changed our lives, because we can do more together, and the rest is history. We went in on that deal as a third, even though we weren't planning on Vedomi. We just went in on that deal as a third, 3/3, and the rest is history. So that's what I'd tell you. Don't get greedy. There's always another deal.
Right.
Take care of everybody. Don't bite the hand that feeds you, and just, that's how Vedomi got started.
So that means y'all both owe Nate like a huge steak dinner, like Wagyu steak, top of the line, like serious, like Nick and Sam's. Like,
I love that.
Well, we already paid him back, because the first part of Vedomi is Nate's last name. So it's the first two letters of each of our last names. He gets to be in the first spot. So there you go. You're welcome.
And the problem with that, Deba, is, he's already told you he lives at Preston and Northwest Highway. He eats like that every night. So
that's true. That is
I wish. Hold on. No, yeah, we can joke on me. I love that. But I want to get back to Deva's question about next year and goals, because I think back to, I could talk on this all day. So I'm going to go ahead and shoot my shot here which is efficiencies that both of these guys touched on in some way, shape, or form, and a little bit what Lance was talking about, how I had called them on that one property that we didn't end up buying. But ultimately, next year, my big goal is to streamline everything. I mean, we've done this time and time again. Now let's do it better. Let's do it more efficient. Let's streamline the whole process. This needs to look like this, and get it all in their little boxes so we can go faster and faster and faster, because we can't help more people unless we do that.
Yes.
If we do it like we are right now, okay, we're doing fine. We're doing good. Way to go, guys. Pat on the butt. But how are you going to help more people and more people unless you get better and faster and more efficient? Right. So that's one of my big goals. And back to the deal. Sorry, I'm getting sidetracked here, but back to the deal that I called Lance on. I understood that back then. I'm like, I've done a few deals. That's all well and good, but how am I going to do the next one that's 50 more units, and the next one that's 150 more units? Yeah. It's like, well, okay, we need to bring in more people. And whether or not you join up and you create a company, or you're just working together as a partnership or whatever it may be, I understood it at that time that, hey, I need these guys and these guys need me, because I've got the inside track on this deal, and whether it goes through or not, it's worth a shot, because I wasn't going to close that deal by myself had I gotten it, but they don't have an opportunity to get into it. So everybody needs to be winning all the time, and that can take a lot of different shapes and forms. But ultimately, being willing to share a piece of the pie will get you a hell of a lot further than being stingy with it.
Yeah. And it feels better. Like, it really feels better to see other people win too. It just feels better. Like, you can win all day, but then who are you going to call to brag about what you did? Because they're going to be like, oh, you didn't give me any. Like, so it feels good to help other people.
You got to have somebody to go sit on the beach with. And so we'd rather go do it together than
absolutely.
By ourselves, so.
Well, guys, I just want to say this has been a phenomenal podcast. I hope that we can figure out a time that we could all get together for lunch or something. because I feel like even when I'm talking to my mentees, they may not want to flip. They may not want to get fully involved and put any type of sweat equity in any property. But this may be a great line for them and say, hey, I can get you connected, and you can still be part of real estate, because real estate has so many different colors and flavors that there's a way for everyone to get involved and to change the trajectory for their lives.
I love that.
So how can they get connected with y'all?
So vedomicapital.com, VEDOMI capital.com. Please follow us on Instagram at Vedomi Capital, Facebook, theadamjmitchell.com to go order your copy of Life Pillars, or just search Adam Mitchell on Amazon. Give him $7. What else? Nate,
any social media, LinkedIn. I think we got a TikTok coming up soon.
Okay,
that's news to me. I don't know how to TikTok, but apparently it's happening.
No dances. Yeah.
All
thank you so much, Deba, and we'll cross share everything you've done for us as well, and let's get folks over your way. You're doing it right, and you're it's so cool to see your journey, and it's not easy to do what you're doing, and we've tried it. We've never committed to it, but we try it just enough to fail, and then we get a little bit of like, man, this is hard. Let's leave this to Deba. Let's go back to multifamily, So, but no, you're doing a great job, and we're just thank you so much for having us, and any way we can help you and support your team, please let us know, and we'll let you know the same. I've actually got a couple of single family leads I've been working in Garland that I need your help on. I don't know if I'm not negotiating well. I don't know if these people are crazy, but I'd love to get your second opinion on. So
it's probably the latter, but yeah, whatever I can do to help, I got you, because Garland's a little bit different.
It's tough. Yeah. Cool.
Well, thank you guys so much. If you guys enjoyed this podcast, please like and subscribe, and we can't wait to see y'all next week. Have a good one.
Thanks, Deba.
Thank you. Bye.
Bye.